Hello, YouTube, and welcome back to this dividend portfolio. Here I'm tracking this dividend portfolio week to week, month to month to see how this will grow over time. This is not financial advice. I just wanted to show potentially how a dividend portfolio could work. And so if you've been following along, this is where we're at today. Um, the monthly dividends for December have the rest of them have come in, and it's at $302. So I'm going to kind of riff off the last two videos here, but this is great. And just as an overview, what I'm kind of trying to do here is go off of one of the parts of the Rich Dad Poor Dad book. There's more. There's always more to learn, but essentially, this part about assets versus liabilities. An asset is anything that puts money into your pocket, essentially rental property, stocks, etc. Liability is anything you own that takes money out of your pocket, such as car loans, credit card debt. He does say that there are good types of debt that you can leverage. I haven't really gotten to that stage yet, uh, but overall, essentially, we want to make our money work for us, and we want to buy assets that generate money. And there's different ways to do that. Obviously, building a business, something like that, different kinds of side hustles. But I want to buy assets that make me money while I sleep, etc. So this is the journey of doing that. This is just part of a larger portfolio. Um, it's up to you. Maybe talk to a financial advisor. How much of your portfolio should be in a dividend income type of strategy? But I wanted to inspire people and show how this could work. I'm going to go over all of the funds, and I have a fancy new chart. So let's get into it. Last video, the monthly total had come in, I think, close to about $200, which I was a little confused by because I've continued to buy more of these assets, and I thought that this month would come in higher than the previous month, especially since I kind of doubled this dividend here, which was $47 last month, was 104 this month, and so I thought, well, this should be about $50 higher, and it was coming in lower. And as we were getting near the end of the month, there are a few larger dividends here. This $30, $13, and $21 that hadn't come in yet, and I was a little confused. So maybe this is just learning. It's possible at the end of December, some of these calculations of these funds, maybe they like come in late since it's the end of the year and it's some kind of corporate thing or whatever. But the new dividends did come in, and I'm just going to guess, but I think the $30 is this 31, which, I buy a little bit more every month. So um, I think the $21 is this $22 dividend, and the 13, I don't know, it might be this $16 payment. But we didn't see these before, and so these were kind of the missing pieces um, of why we were coming in a lower dividend amount than the previous month. And I think this should tick up a little higher every month, especially since the dividends are buying back in. So this is great news. Brings our total for the whole year to 15,000, or excuse me, $1,548, which is awesome. We've been growing this, so I have a couple charts, and some of this, I'm just kind of doing quick and dirty just to show how this is kind of snowballing. Some people think the snowball effect doesn't really get going until you get like 100K or something like that. But either way, month to month, we started this in April, and month to month, this is just the sum of the dividends. So this is going to go up no matter what, but we broke 1500 for the year, which is awesome. And then the monthly, we've had a couple outliers. Because if this is your first time seeing this video, I had some of these like ultra high yielding dividends, which were just the NAV, they were just losing money, but the dividends were high. So I got out of all of those. So some of these outlier months, like October and August, the dividend payments were very high, but those funds themselves were tanking. So really, they were like break even months, which wasn't good. Um, these are all the funds I'm holding right now. If you have some ideas of some funds that I don't have that I might want to consider, I will look into them and check them out. Um, so this chart on the right, the monthly, should sort of smooth out and just a nice trend up and to the right. But this is just the total dividends coming in per month. So December is $302, and that is inspiring. Also, this month had the most dividends. There's some small ones, right? Some 6 cents and $1.12 and 19 cents and 60 cents, but these are we got a total of 30 separate dividends came in this month, which is pretty cool. Um, so if this continues into next year, and I didn't buy anything new, $302. First of all, if I divide by 31 days, we're getting close to $10 a day in dividends, which is super awesome. Obviously, the money's just buying back into the funds right now, but that's pretty cool. So I feel like, yeah, if I go buy one of those $5 coffees or something, it's not like destroying me financially, because I made almost $10 in dividends that day anyway. So that's like a monthly average, right? $302 divided by 31 days in the month. So that's great feeling to feel like this is making $10 a day on average. And then $302 this month, if I multiply by 12, that's the whole year. Next year, 2026, if I don't do anything else, this should or could bring in $3,600 next year, which is pretty awesome. Definitely looking forward to that. Depending on what type of account I'm in, this may or may not. I could have to also pay taxes on this, which you have to take in consideration if you do this in a Roth IRA. Of course, you're not supposed to take the money out until you're like 59 or something. But that money won't be taxed as the dividends are coming in. So encourage people to learn about all of that. But either way, this is pretty cool to look forward to for next year. What else is going on? So I made a new chart over here on the right that I'm going to go over. But down here, all these numbers and stuff. So these are the funds. On the left is the weighting in the portfolio. So that's how much of the portfolio each one of these is. And I started doing this not too long ago. So this will sort of change over time. But you can see the weightedness of these different things. What is this? The annual yield. I did update this in the last video. These are subject to change a little bit, so I have to pay attention to that. they shouldn't change massively, but as the fund values go up and down, the annual yield of the dividends can change, and obviously there can be market conditions, and all this is risky, but one of the ways to lower the risk is to have a variety of funds, right? You can see some of these are higher yield, right? SPYI is 11%, QQQI is 13%, just about. So why wouldn't I just put everything into those? It's because of risk. Um, so I want to spread out among different funds, meaning different companies, different managers, different sectors. Some of these have big overlap and some of them have less overlap, but essentially, because some of these have like fund managers, something goes wrong at that company, even if there's overlap, there's some bad news about that particular fund. I want to be spread among a bunch of different things that have different strategies. So the newer ones that I added are down here: IWMI, CSWC, and ASGI, which are doing well, and I'm liking these a lot. So um, the other thing I added was I started just real quick and dirty, but in Robinhood, I can take a look at like the total returns. So when I'm doing videos, I'm going to be updating these columns. It's not super scientific or something, but I'll just quickly look at like what is in the portfolio, what is the total return looking like at the fund. If we have a massive, like a big market drop, like these are going to go down, and the market's been doing well. But, and again, this is only a dividend portfolio. Um, it's probably good to have like also some growth stocks, and I may have like other portfolio positions and stuff. So this is just to show how a dividend only type of portfolio should work or could work. Um, so this is just basically by video. And I charted this out to make it look a little easier. But anyways, so as of this video, um, not a lot of changes, but you know, JEPQ basically stayed the same from the last video. SPYI went up a tiny bit. QQQI went down a tiny bit. Uh, GPIC went up a whole percent, which is cool. JEPI is up a little bit. SCHD is up almost a percent. Some of the ones that are in the red, SPHD went down a little bit. JAAA down a little bit. SPYT. Um, Now we're going to talk about this one a little bit more. This is the highest risk position that I have, and you're kind of balancing like annual yield with risk, right? This is about a 20% annual yield, and it is the highest weight in my portfolio. Obviously, tempting to put everything into this one, but we know that it's also riskier, um, which is a little bit reflected in this is the overall. I'm going to dive into this one even more down here, but um, it's had its worst, less of a performance. But we did go up um, a whole percent since the last video. So this is going to be more volatile, uh, and that's kind of a result of like how the fund is run. But it does have this bigger annual yield of 20%. So it went up a whole percent since the last video, which is cool. We went and, if this dropped a lot, I would have to consider, like, if I get to the point where it's just break even, I'd have to consider dropping it like I did some of the other ones from the past. But JBBB is down um, almost a whole percent. This is a little concerning because I think this is supposed to more hold steady. I don't mind if it's down a teeny tiny bit, but This is more, a little more movement than I'm expecting, but I'm not going to change anything. Claws, basically holding steady. CSWC is up over 1%. Anyway, so these are the returns for this video. And then what I'm doing over here to try to make this a little bigger, uh, visualize this, which I think will be kind of handy. So this is these numbers. We have like the total returns from the videos, column 1, column 2, and the new one of, the current video. And there's probably a better way to do this, but, I'm not trying to spend too much time on this. So this is just looking at each of the different funds, right? JEPQ, SPYI, QQQI, and so on, and showing, like, is there any trend in the total return, for each video that I make? Is it holding steady? Is it going up? Is it trending down? Right? So GPIC is up for this video and it's kind of bounced around. QQQI sort of trending down. JEPI is still trending up, which is awesome. I think that's JEPI. Okay, and yeah, over here is the amount. So JEPQ is my best performer overall. Um, but yeah, like JEPI is trending up, which is nice to see. Some are trending down. Some of the ones that were in the negative are less. And anyways, just a nice way to sort of visualize um, where it is. Here's SPYT, which was the most negative, but it's bumping back up. Um, so I could probably find a way to like average this whole thing. Um, More of the funds are in the positive. But this is, when this is calculated, it doesn't really take into account in a normal way like the dividends as well. So moving on, this higher risk one, SPYT, last time I went into this as well to kind of show, like, am I breaking even or whatever. Like last video, it was down 2.39%. And since it's a high weight in the portfolio, a large enough drop could just wipe out everything. So, where are we at? These are all the dividends that have come in. Or, well, right now, if it's down 1.17%, that is a return of negative $75. Um, However, the dividends that have come in for the year, as I've grown this and I doubled it since the previous month, these are all the dividends that have come in for the year, right? So $10, $12, 47, and so on. The sum of all these is $203. So if I take that 203, add it to the negative 75, the final return for this is 128, which is, so the 203 is more than double the negative 75, right? So even though this is negative 1.7%, I'm still in the green on it once I add up the dividends, which is, this is fine. And this one pays early in the month, so January, like, let's say this holds steady, January we should get another 104 or something um, dividend. So that will look like, if I put in like 208 here. Oh, this didn't update. Let's do this, 307. So yeah, if this holds steady, then at the beginning of next month, it'll be 232, which is pretty cool. But anyways, yeah, if the return is more than the sum of the dividends, then I'm really in the negative, or it could, these riskier funds, it could get easier to get into just like the break even territory. On the left is the weight. This is the weight of what is in the portfolio. Some of these have changed a little bit, some smaller, some bigger. I put in a lot more in IWMI, so we should see some bigger dividends from this. This is now 8% of the portfolio. Um, and the weighted average of all of these uh, is still about 11.4% dividend return for the whole portfolio together. Um, and down here, I've shown this chart before. This is the annual yield, the dividend yield for all these different funds. So you can see which ones are lower and higher real quick. Um, so that's everything. Again, pretty happy about hitting this $300 mark for this whole month, and hopefully this continues. I may do some more rebalancing. Um, I've liked Clause. It's 11% of the portfolio. This has been like kind of a staple in the portfolio. It's like really what I started with. Um, I'm not sure it should be 11% of the portfolio anymore, though. Um, I may balance some of this into QQQI, um, because even though this fund should stay pretty steady, the 7% yield, it's pretty tempting to want to get it more into something like this 13% yield or 11% yield. Um, and these ones are also bigger. So I'm not sure that Clause should still be 11%. Same thing with JAAA is only 5% yield, and it should be safer type of investment. But should this be 8% of the portfolio anymore? As I've kind of been learning how this all works. Maybe not. And these other higher dividend payers down here at the bottom, um, maybe some of this JAAA should also be balanced into these. Um, so, anyways, that's the whole portfolio today, and breaking 1500 for the year is awesome. Going into the next year, I'll have to figure out. Well, I just kind of keep building off of this, probably, or like make a new sheet for a different year. Try not to overcomplicate this. But once again, if there are funds I should take a look at, leave them in the comments and I'll check them out and see if they have a place in the portfolio. And either way, thanks for watching and following along as I'm kind of growing this, and we'll see what 2026 brings for the portfolio. And thanks for watching.